Well, good morning. This is the Your Home Sold Guaranteed radio show. I'm your host, Dave McKay. Joining me is Wally Kerr. And Wally, first, right off the bat, we joke about donuts, and you were serious. You brought the donuts.
Can you hear them, listeners?
Yes.
Good morning, my good friend Dave. Hope you've had a great week. I did bring.
Yes.
Are you going to have the cake donut today, or do you want? No. Okay, I got some guilt here.
Okay.
All right, I didn't get up early enough. Had to rush up here, and I didn't stop by Dunkin' Donuts. Kind of limited selection today. I did not get my favorite Bavarian cream.
Uh-oh.
You got two choices here. You got a chocolate-covered donut or cake. Which one's yours?
Chocolate.
You want the chocolate-covered? It's yours, brother. You can have it with the coffee we've got in here. It's great to have our listeners back this week. Had several calls from listeners this past week. We're ready to get on with a great show today, and I'm delighted to be here with you this morning, Dave.
Well, give us a little teaser. What are we expecting to mention about today?
We always talk about a market update. We had also several questions from callers this week, so we'll jump in and give them some answers to their questions on our show today. We're going to be joined, Dave, one of the things I'm noticing is the cost of insurance is really going up, like homeowners insurance.
Yes.
Have you noticed that? I mean, have you gotten any renewals on your own personal home over the last 3 or 4 months, or does Kim take care of that stuff?
I think we've seen something. I'll have to talk to the boss.
So, yeah, it's always a good idea first.
Yes.
Listen, Cindy and I got a renewal on our investment properties recently, and our insurance was going up quite a lot, which really doesn't surprise me because we've had some big storms here.
Yes.
And we've had some hail claims on our investment properties. Our own home has escaped injury. Okay,
oh, that's good. That's good.
But we've had a lot of claims. So insurance costs are going up. We're going to be joined by Skylar, Hake today with Heritage Insurance Agency. Actually, office out of Edmond, but they service the entire state of Oklahoma.
Okay.
With some money-saving ideas on homeowners insurance and probably even on car insurance.
Great.
He'll join us today. And the other things we'll talk about, how about this one? Came up with a new topic today, a creative idea on how to save money when moving. A lot of people moving right now.
There's probably a lot of cost that we don't think about that's associated with moving.
Oh my gosh, just moving utilities, changing utilities, paying deposits, movers. We're going to talk about some creative ideas on how to save money for moving. And if you're not moving, maybe you can share some of those ideas with your best friend.
Absolutely.
Or your nephew or whoever it is moving and see if we can help them out. Dave, I brought back a few questions for you today on the
real estate quiz.
That's it. The real estate true or false. And then we're going to talk about some homes of the week, some open houses this weekend, and then maybe a couple of new statements. I've got some agents on my team, Dave, that need homes. They need homes for their buyers, and there's a shortage of inventory. Listen in today, because if you're thinking about selling or know someone that's thinking about selling, it's not necessary to just go throw a home on the market and look for buyers. I've already got them.
So this is very good news for people that are a little late in the game, because it's basically, well, today's the 1st of July, and we talk about, we only have a window now of maybe 30 to 40 days where people are not going to be thinking about moving and buying a home anymore because they have kids and they want to keep them in that same school district.
And probably shorter than 30 to 45 days.
But this is good news. This is good news for them.
We've got, don't go just list your home for sale. Call me first, because I've already got buyers stacked up.
Yes.
I've got a list from just 2 of my agents today, and it's extensive.
And your average is 17 days. Is that right?
Wow, how do you remember that? So in 2022, we closed 162 homes for home sellers. And the average days on the market for our team last year was 17.
That's great.
And the average area agent was 38, even though the market was pretty good.
Yes.
It was 38. So, yeah, we got some good numbers, Dave.
Good. That's awesome. Welcome back. And, Wally, what's the market doing? Any big swings, any big numbers to mention? Or are we good right now? What's going on with the market?
Dave, you're one of the people that knows this, and a lot of our listeners don't. I was a disc jockey, back in radio in my 20s. Yes. So I'm going to equate today's market update, and I'm going to say, the record is stuck, the record is stuck, the record is stuck.
Okay.
Look, and I sound like a broken record, Dave.
Yes.
But let's give some quick numbers here, and we'll run through this really fast. Dave, there's been very little change in the market over the last 5 weeks. There really hasn't. We're now about 30 to 35 days into interest rates at or near about 6.75%.
Okay.
So, buyers would love rates to be lower, right? And sellers who own a home right now and have a much lower interest rate on their home are less likely to sell.
Is that Is that okay though? Because it gives you a little confidence if you do need to buy, if you do need to sell, that there aren't wild swings right now. You can be kind of confident that the rate's going to kind of stay where it is.
Yeah, you hit it on the head. So again, for about our third week in a row, there are about 10% more listings on the Oklahoma City multi-list. These numbers are courtesy of Oakmar, the Oklahoma City Metro Association of Realtors, and the multi-list, showing that in the Oklahoma City multi-list there were about 10% more new listings last week, Dave, than there were homes that went under contract.
Okay.
So if you're a buyer, there's some good news. Inventory is increasing week by week. 10% more this past week, 11% the week before, 12% the week before. So inventory is coming up. Buyers are a little bit less hesitant. They're looking for that bump down in the interest rates to excite them and get them into the market where they want to buy.
Okay.
May and June, really what I saw in the data is as we wrap up June, May and June were the big months for the number of new listings being placed on the market each week.
Okay.
And now it's beginning to subside just a little bit.
Okay.
Not a huge number, maybe 5 to 7% less on new listings compared to the week before or the week before. But it is subsiding a little bit, which tells me, Dave, what we've talked about here on our show. And that is, hey, if you're going to sell a home, you really need to get it on the market in April or May or June.
Sure.
When buyer activity is the highest. Now it's pulling back a little bit. But if you've been shopping and you've been disappointed with the amount of available inventory and the number of homes for sale, it's beginning to improve.
So I was going to ask, how does that correlate with, does it follow behind a little bit with the number of homes being sold? The number of homes being placed on the market, you mentioned, is starting to come down. Does that mean the number of homes being sold, that number will start to come down a little bit?
Yes, absolutely. You're going to see there'll be a direct correlation between those. And the number selling doesn't have anything to do with the number being listed, because in times of recessions or too much inventory or when the market changes a lot, you can see that number of listings go way up, and you can see the number of pending homes go way down. So right now you can just tell it's buying and selling season. People are listing. It's a great time of year to sell a home. And then people are also buying homes regardless of what interest rates are doing. Would you like to know a little bit more? Maybe the listeners would like to know what the hottest price points are right now.
Sure.
I think that'd
this
be
is
helpful.
the hottest time of the year. And if there are some fewer homes, what's that doing to prices?
Of the 590 homes that went under contract over the last week, Dave, here's how it looked. 50% of those sales, as a matter of fact, let me take that back. I ran the numbers for the last 4 weeks.
Okay.
And there were about 2,125 total sales in the MLS placed under contract over the last 4 weeks. 50% of those, Dave, were under $200,000.
And those are the ones that you said were kind of hot.
That's the hot part of the market, and
okay.
It continues. You know, there's some investors still buying, although investors are beginning to pull back just a little bit. Rents are beginning to soften up a bit.
Okay.
And the supply of rental property is increasing. I asked my property manager this week why, and he said there were fewer qualified renters who could afford to rent right now.
Okay.
And there were a lot of owners that were hanging on to how high rental rates got over the last couple of years, and they're a little hesitant to bring down how much the homes were renting for. So that's causing a little bit of supply.
Okay.
So real quickly, let's make this fast. 50% of the homes that went under contract over the last 28 days in the Oklahoma City multi-list were under $200,000. Another 14% on top of that were under $300,000. And then 80% of the homes total were under $400,000. And get this, I'm seeing that top part of the market in the top price ranges beginning to slow a little bit.
Okay.
And that's probably because a higher interest rate just means a lot higher payment.
Yes.
When compared to a 4% rate,
Sure.
and now being closer to 6 3/4. 96% of the homes that went under contract over the last 4 weeks were under $700,000.
Yeah,
So,
I could see that because exponentially, you're talking about hundreds of thousands of dollars over the course of 15 to 30 years when a home is 1.1 million or something
a
like
much
that.
higher payment. And what's interesting is that last 4% of sales, Dave,
Yes.
over $700,000. Man, there's a lot of those that are cash purchases. Doesn't that make sense? Because if you're buying cash, you don't care about interest rates, right? So a lot of those people buying above $700,000, 4% of the sales over the last 4 weeks have been above $700,000, but a lot of those are cash. So we'll talk about that maybe a little later in the show today. We've got some great information for our listeners today. And listen, if I can help you buying or selling, it's still a great time to sell a home. And if you're a buyer, inventory is increasing, which means you might make a little bit better buy on a home. If I can help you in any way, I'd love to be your realtor or your broker. Give me a call today after the show or anytime this week when you're comfortable doing so at 330-3000. I'd love to help.
Okay, now we've been doing this for a couple of weeks, and this is really cool where we take calls and we answer those calls live on air. We're not taking the calls live, which is, so if you're listening right now, you can kind of rest easy. You don't have to worry about, I want to ask a question, but I don't want to be on the radio. You can call in and leave a voicemail, and we'll play that back, and Wally will answer that question. And the number is 1-844-211-3817. Again, 1-844-211-3817. And then once you get in, the extension is 1234. And all you have to do is say, hey, Wally, I've been in my home for about 13 years. I'm looking to move, but I really don't want to put it on the market. What can you do? You know, can it be one of those, what do you call it, those ghost buyers and ghost properties?
Right,
and,
right.
So they can ask any kind of question. So we have a couple of questions today. And
hey, you want to just roll that first call and let's listen in, and I'll be glad to give an answer.
Okay, so then it goes. And then this is... hey, Wally, can you tell me my closing costs will be when we sell my home?
Hey, this is a great question. You know, Dave, when we sit down with a seller, anytime we place a price on the home with the seller, we sit down and say, now, here's, how much your home should sell for, how long it should take to sell, and then let me figure out for you how much you could expect to walk away with when all is said and done.
Yes.
So if you want to write these down, if you're a home seller in Oklahoma, unless you pay some buyer closing costs, which obviously you're not required to do, really the costs are very affordable to sell a home. It's typically, Dave, in the range of about $1,100 to maybe $2,000, depending on your price point. There's something in there that is based on the price point, and that's what we call state tax stamps, also called documentary stamps. So let's run it real fast. You bring your abstract to date as a seller, per the Oklahoma purchase contract, that's about $550. You pay half of the title company closing fee because they do all the paperwork, they pull in the money, and they escrow and pay out all the bills. Closing fee is about $225.
Okay.
There is a uniform commercial code certificate. Dave, a UCC is just a court check before closing to make sure the seller doesn't have any liens against their property.
Okay, this is like a clean title.
Right.
Kind of, right?
They're looking to make sure that the seller doesn't have unpaid IRS, state tax liens against the property that have to be paid off when it closes.
Sure.
You can't put those on another property, and you can't ask the IRS, unfortunately, hey, can I mean, you can ask, but you and I kind of know what the answer is there, right? Sorry, Mr. Seller, you owe some money, and you're going to have to pay that to close.
Yes.
It also looks for mechanics or materialman's liens, so that's $100. That's called a UCC certificate.
Okay.
You pay these documentary stamps, which is $1.50 for every $1,000 you sell a home for.
Okay.
So if you sell a home for $100,000, the doc stamps are $150.
Sure.
Okay. And then you pay your property taxes. So they're prorated based on last year's taxes. So if I were selling a home today, let's say I closed exactly halfway through the year.
Okay.
Let's just say I closed on June 30th, yesterday.
Yes.
Okay. And the taxes were $2,000 a year last year.
Okay.
Now I pay $1,000 at closing and I'm done.
Okay.
The title company gives that $1,000 to the buyer at closing, and then the buyer will be responsible for the taxes at the end of the year. Dave, that's it. That's the only seller closing costs that are required. And then, of course, you've got a brokerage fee if you've hired a broker like me.
Sure.
So $550 abstract, about $225 for the closing fee, $1.50 per $1,000 for the documentary stamps, $100 for the uniform commercial code certificate, checking for liens, and then your property taxes. And that's what seller closing costs look like.
So it sounds like maybe about $2,000 to $2,500.
Well, again, about $1,200 depending on the price range of the home. $1,200 to maybe as high as around $2,000.
Okay.
So it's not nearly as much as you would think.
Okay. Let's take another call. Here we go. Okay, so this is an interesting one. Buying an older home from a for sale by owner. And we've gotten into the different nuances when there's a for sale by owner, what you have to disclose, what you have to take care of. So this question about the old water heater that the appraiser wants brought up to code. Apparently it's an old water heater. It might be an older house and they like older homes and want to fix it up. So
exactly,
what did they do in this situation?
So in this case, the caller said, I can't get it closed and the owner isn't willing to pay the $2,000 to get it raised. And here's the reason, Dave. Those older water heaters that sit only in a garage, now if it's inside a home in a closet, it's no problem.
Okay.
Appraisers and mortgage companies and home inspectors are afraid that gasoline might be stored in a garage. And if you leave the lid off the gas or the tip off, it allows the fumes to crawl literally out of that can and then lay low on the floor. And then if the hot water heater fires off, it could cause an explosion.
Yes.
So these hot water heaters where the flame is supposed to be at least 18 inches off the finished floor. And on government loans, especially FHA, VA,
okay,
the appraiser will look at the home and say, I'm sorry, that hot water heater has to be raised. Yeah, it's about $18 to $100 to $2,000, depending on the water heater, maybe a little more,
sure,
maybe a little less, to get that done by a licensed plumber. So in this case, what I would recommend is done here is if the owner doesn't want to do it and you really want to buy this home, I'd recommend going back and adding $2,000 or, tell you what, go get a plumber to estimate how much it's going to cost to do the job.
Sure.
Let's say it's $1,800.
okay,
Let's say your purchase price on the home is $200,000. Add $1,800 to the price. Okay, as long as the home appraises for enough,
yes,
change the purchase price from $200,000 and add $1,800 to that.
okay,
Make the purchase price $201,800, and then have the seller go in once the buyer is fully approved, subject to no conditions
sure,
for closing. Everything's ready to go except for that water heater. Get a plumber to come out and do that job 2 days before closing, and then the plumber can be paid on the settlement statement so that it's really not cash out of pocket for the buyer. It is not cash out of pocket for the seller.
It's a win-win.
It is, and you know what? If you can reach a win-win when you're buying and selling between the parties, it makes for a much happier closing.
Again, the number 1-888-211-3817 if you want to call in with your questions, extension 1234. We got time for one more. Let's listen to one more call here. Okay, here's one that I had questions about, and we talked about this the first couple of weeks I think we started doing our show, because I thought we'd just go pick that, but I could see where there would be a little bit of no, I want to pick my guy. No, I want to pick my guy, because you're going to get
you figure the seller wants to pick the appraiser and get the value shot up really high.
But
right?
the bank, does the bank choose, or this is really for the bank knowing the value of the home for the value of the loan they're going to give out?
I like this question for our show today. So after the big mortgage mess of 2008, one of the revamps to the system was they choose outside companies to choose the appraisal.
Okay.
So let's say you're working with Gateway Mortgage today.
Yes.
You're working with Chris Doak at Gateway, which is one of our favorite partners. When Chris can't just call whichever appraiser he wants to.
Okay.
He may know an appraiser that gives values a little higher.
Oh, so even the mortgage company could. You're right.
The mortgage company can't choose. Now,
Okay.
Dave, it's what's called an appraisal management company.
Okay.
And so it's a neutral third party today that chooses the appraisal.
Huh.
It can't be the seller. It can't be the listing agent on the property. It can't be the selling agent. It can't be the buyer. And it can't even be the mortgage company. They'll literally take that appraisal order and post it on an internet chat board. Okay, and an appraiser goes through and looks at the data and says, yeah, I'd like to do that appraisal.
Okay.
And so they pick up the appraisal, and what's more important, let's just say the appraiser goes out there. Let's say they're appraising your home today, Dave.
Okay.
You've sold your home.
Yes.
Okay. And Wally's going to help you find another one.
Okay.
And so anyway, your home and the appraiser comes over. And the first thing a buyer thinks is, you don't really want the seller to be there because the seller is going to try to influence the appraiser.
Sure, I can see that.
Do you know that if an appraiser is influenced by anybody interested inside the transaction, they can lose their license to appraise?
Sure, because they're supposed to be neutral.
Neutral. A
Yes.
position of neutrality. What's the home worth, and can they defend it based on comparable
Yes.
sales? So the answer for our caller is, who picks the appraisal? And it's done by a neutral third party appraisal management service.
I like that. Hey, once again, if you'd like to call in and say, hey, Wally, and have your question answered on the show, call in 1-844-211-3817, extension 1234. We'll be back with more of the Your Home Sold Guaranteed radio show right after this. Welcome back to Your Home Sold Guaranteed radio show. And Wally, it's guest time. We have a special guest, Skylar Hake of Heritage Insurance Advisors. Skylar, thanks for joining us this morning.
Yeah, thanks for having me. It's
Hey,
good to be on.
tell me a little bit about your agency, and I want to know, do you mostly handle just normal houses and homeowners? Do you do businesses? Do you do other kind of properties? What's your main focus for your insurance agency?
Yeah, sure. So we're an independent agency here in Edmond. I think we're going on year 7 now, just getting into that. We definitely primarily focus on homes and cars, just the personal lines. It's really kind of our niche that we found that works the best, and it's kind of where we like to be. We do certainly service the commercial markets and do some business insurance and things like that as well, as there's a need for our customers. But yeah, home and auto is definitely where we make our bread and butter.
So when you get a customer that's interested in, and I assume I call you and, hey, I think I have some hail damage, or I think I have some property damage. I may be a little, I'm kind of nervous. Is it going to be a huge dollar sign? And what does this all entail when I have you come out? How do you approach that? How do you put me at ease when you come talk to me about my property and what my needs are, and maybe what's happened to my property with like hailstorms and stuff like that?
Yeah, sure. So hail's obviously the big one. We see wind and hail, here in Oklahoma. A lot of that's just the first initial discussion is just kind of let's just assess the damage, see what it looks like, maybe get some estimates just to see is it worth filing a claim, because there's obviously deductibles and things at play too that may or may not make sense to go the claim route. Really, a lot of that's just we try to do a lot of the work up front when we write the policy to make sure everything's covered properly and well and adequately. So that's usually we're in a good spot there.
Yeah, and I want to jump in here too, Dave. So instead of just having an insurance man in today, so Cindy and I started doing business with Heritage back 5, 6, 7 years ago. And here's what I've been impressed with. They saved us a lot of money. And that's the reason I wanted to have Skylar on today, is we have a home. We have 11 investment properties. A couple of those are duplexes. And recently, Skylar, what I noticed, Cindy, came to me about 10 days ago, as you know, and said, wow, our insurance has gone up a lot. And I said, well, I'm not surprised about that. Look at all the hailstorms across the Oklahoma City metro.
Sure.
And so basically, Cindy called Skylar and said, what are your best recommendations for getting our insurance costs down? What would you recommend? And so I think that's the key, is having someone in today, and instead of just talking about, hey, I can help you with insurance, I want to get some ideas from Skylar, and I want him to share what he did for me and Cindy, because not only has our insurance coverage been great, and we've had 7 or 8 at least, Skylar, I would think, 7 or 8 of our investment properties that have been affected, and they've taken really good care of our needs. So can you address that just a little bit, Skylar?
Yeah, for sure. I'm sorry, I honestly completely forgot.
Oh no, that's right.
No,
Let's just talk about what you did for me and Cindy, and how we changed our insurance cost.
Yeah, for sure. So there's a couple things you can look at to kind of find the best price, and going back to part of we're an independent agency, so what that means is instead of just serving or offering one specific insurance company, we have a plethora of different options. And it really just comes down to finding the right fit for the right person, the right house, because not every company wants the same thing, and so you might have a better rate at another place versus another. So that's kind of the start there, is just having those options. So really finding the best carrier, the best insurance company for you and your specific scenario. And then there's deductible options to look at. We can increase deductibles, which brings the cost down.
That's what you did for us, wasn't it? You increased our deductible because we could afford to pay for that. We've been wise and savvy and kind of Dave Ramsey types over the years. And so Cindy called and said, wow, Skylar, this policy went up on this investment property maybe $400 or $500 a year. And she said, Wally, I'll bet that maybe if we made some changes to deductibles, that would help. So address that a little bit and tell our listeners more what they might consider doing, depending maybe based on what they're doing now and how they might change. Because affordability, especially for first-time buyers, is really tough right now.
Right.
Not only are home prices higher, but then property taxes are going higher, and then as insurance goes higher, it's just really, Dave, it's become a real affordability problem for a couple that wants to go out and buy a $225,000 home with higher prices. higher interest rates,
Sure.
higher insurance because of storms, and then higher taxes.
Yes.
So what's a couple of good solutions there, Skylar?
Yeah, so one, certainly, like I said, just to shop, find the best carrier for you. Don't just go to one spot and take the first rate you see, because it's probably not the best. Second is the deductible options, and that's kind of an individualized decision for the couple or for the policyholder. It kind of comes down to their personal risk tolerance and also just their financial stability. You know, we don't want to put someone with a $10,000 deductible that only has $1,000 in their pocket, because that's not a good spot for them to be.
So are there specific, can you do a 1%, a 2%, a 3% deductible, and is that up to each person? Or is the mortgage company going to control that?
Yeah, so a lot of times, especially with like FHA mortgages or stuff like that, where they're a little bit more controlled, they typically do have deductible restrictions, obviously, because they're collateralizing the home, and so they want the protection for the policy too. So they want to make sure that if there is a claim, the homeowner can actually pay the deductible and fix the home. So you run into things like that. Yeah, typically, so in Oklahoma we have a separate wind and hail deductible. Obviously, that's our biggest claims scenario for the most part on the homes. Typically, the minimum on most of our carriers is a 1% deductible, meaning 1% of the coverage amount of your home. So if your home is covered for $350,000, a 1% of that would be $3,500.
Sure. Okay.
A lot of times the next option is going up to 2%. You know, you can go all the way up $15,000-$20,000 separate deductibles. So it just kind of depends. We'd like to try to stay towards that 1%, because you know, you get into $600,000-$700,000 homes, you're looking at $6,000-$7,000 out of pocket come claims time.
On a 1% deductible.
Right, and that's the minimum. And so going up past that, so like I said, you can definitely increase past that 1%, but it's always kind of a conversation we have with people to make sure they fully understand the consequences of that too, because if there's a claim, it can really change the numbers.
So I got a question. I know that if I've been in my home for 15 years, there's certain ways to kind of estimate the value of the home. I know that, like, I can't really look at taxes with the county assessor, because that's not going to be until it's sold and all that stuff. Now, how do you figure out the value of my home, or do you have to bring someone in? Like, do you literally have an appraiser come in, or how do you figure out the value of my home, knowing what coverage I need and how much cost I'm going to be at?
Yeah, that's a good question.
Yeah, that's a really good question, because we get that a lot too. So there's kind of the difference of the insurable value that we're going to look at is completely separate from market value. So what you pay for your house.
Oh, okay.
Because we're only insuring the home, the structure, not the land. The land has some intrinsic value as well. So
sure, okay.
If you have a 5-acre lot or something that is worth a couple $100,000 just in and of itself, we're not insuring that. We're just insuring the home. So actually, every carrier has a different way of looking at it, some sort of replacement cost calculator or tool that we'll go into. We'll enter. You can get really specific on there's 8-foot walls, it's 2x4 studs, what kind of shingles, or how nice are the bathrooms, how nice are the kitchens. We put in all the stuff, all the things, and it kind of spits out that number that tells us this should be the cost to replace or reconstruct the home too, because that's what we're looking at. You're seeing that a lot now, through the COVID years as reconstruction costs, skyrocketed. You saw your coverage amount going up, 20-30% sometimes. And what people, my house isn't worth $600,000. I paid $500,000, but in the current market, if you had a total loss, it probably would cost $600,000 to rebuild. And so that's an important thing to look at, to separate that from the market value of what you pay.
Okay.
That's really interesting. We were talking about appraisers a little while ago,
yes.
Dave, right? And so when we go in and do a market analysis for a homeowner, and they're going to sell their home, we're typically looking at the comparative market approach. In other words, comparable sales, right?
Yes.
But on the insurance side, they're always looking at the cost approach. If this got blown away by a tornado, the land is still going to be there. Of course, there's going to be a demolition cost if the home was totally destroyed. But they're looking at more the cost approach, and I think that's the reason that insurance has also gone up recently. Skylar, is not only, my guess would be, not only because of wind and storms and hail damage and what's happened here in the metro, but construction costs have gone up a lot over the last 2 or 3 years, and that also affects what people are paying for homeowners insurance, right?
Yeah, absolutely. Like you'll see on your renewals, you may have had $350,000 of coverage for the prior year, and at the renewal, maybe we're getting closer to $400,000, and that's just something every carrier is going to increase that by some sort of factor, and it's really just an inflation guard to make sure that there is proper coverage to replace the cost. Because even if you kept the same policy for 10 years, the reconstruction cost is going to change drastically over 10 years, and so it's important that it automatically does that. But that does obviously drive the cost up a little bit because you're just purchasing more insurance.
Okay, so let's go back to our specific situation. We got a pretty substantial savings. I can't even remember what it was, Skylar. What did Cindy and I do on that investment property and on all of our properties I think Cindy said you saved us $2,000 or $3,000 a year. What did you change on our policy? Do you remember to give us a pretty substantial savings?
Yeah, so for you guys, a lot of your stuff you've had for a couple of years. So some of your stuff was still on $1,000 deductibles, which isn't even offered by the carrier any longer. You're kind of grandfathered into that, and that's a really inexpensive deductible. I think with yours specifically, we changed all of them to kind of just equalize and get everything to a $2,500 deductible, which drove that cost down quite a bit. And realistically, only changed your deductible $1,500. Which doesn't move the needle a ton on a claim.
What would you recommend to homeowners who have been, I think this is what happens with the insurance. Okay, you go buy a home, you close on a home, or maybe you own it cash. I see a lot of people that just buy insurance and they just kind of sit on it. They don't really do anything. And then all of a sudden, one day, like we did, okay, we get that renewal policy, and I think, my insurance went up a lot. What would you recommend to people who, I know that insurance companies are raising the coverage amount on their own to make sure, especially if there's a mortgage on it, that the homeowner's covered. But there could be a lot of people like me and Cindy who just had this $1,000 deductible. But if people feel like their insurance is a little high, what you're saying is we went from only a $1,000 deductible to $2,500 deductibles on all of our properties, and it saved. You remember what that savings was for us?
Total across the board, I think across all your rentals was about $3,500. I want to say.
Yeah, that was
a
substantial savings, Dave.
So you're saying almost to be proactive, maybe every couple of years, maybe every 2 to 3 years. I don't know if that's too often to start thinking about, hey, let's go in, let's talk to our insurance guy and see if we need to make any changes, what we need to do, because homes have been, maybe you're in an area where there were new homes and now you have a lot of subdivisions and those comps are going way up and everything. Maybe we need to check it out just to be sure we have the right coverage and everything. So maybe being proactive with that.
Yeah, absolutely. We at least try to at least once a year touch base with all of our customers. And the biggest thing too is just things change. Life changes. Maybe you upgraded your home. You upgraded the bathrooms. Maybe we need to increase coverage. Did you get a hot tub? Put in a pool? There's a multitude of things that can happen. And like Wally said, most people kind of set it and forget it. We get our home policy. The mortgage company's happy, and we just kind of hang out. And we don't need to file a claim, and so we don't really think about it. But yeah, we do definitely like to have more of a proactive approach. Insurance has a tendency to be somewhat commoditized, where it's just something you have to have, so you buy it, you find the cheapest thing you can get, and you don't really think about it.
Just kind of forget about it until you have a claim, or until you're like Wally and you get this bill in and you think, hey,
yes.
How can I change that? Can I bring my cost down? So the other thing I'd like to say is that when your business partner Jared placed our insurance years ago, I hadn't really ever heard of Safeco at that time. And so he brought Safeco to the table, and I think this is the other reason, Dave, to stress to our listeners to look at options, because he came to me and said, look, Safeco's this large national company. They're not as heavy in Oklahoma. And Wally, companies like the big ones here that I used to carry, whether it was home or auto when I was a lot younger, a lot younger folks, Allstate, State Farm, Farmers, and so they had lots of claims after storms. And so the rates would go way up. But when Jared came to me years ago and said, Safeco's a really, really good company, and the rates are a lot better, and they don't have the storm losses because they're not doing as much business in Oklahoma. He put us with Safeco, and the first time 3 of my properties got hailed on in the same storm, I couldn't believe how good the service was, how good the protection level was. I was very, very pleased. And so that's what a company like yours has a benefit of. Now, I think you still have insurance through Allstate. Is that right? You guys insure through Allstate still?
Yeah, I wouldn't necessarily talk about the Allstate thing because it's kind of this tricky thing.
Okay. All right, so we won't do that. So let me just rephrase that. So you have a lot of different carriers that you work with for insurance, like you said, where people can kind of comparison shop, like we did, to come up with really good options. Is that right?
Yeah, that's the thing. We have, really for home and auto, probably 5, 6 to 7 different really strong carriers. We look at all of them. We kind of handpick who we want to do business with, and how's their financial stability, what's their rating, and what's their ability to pay claims, and are they going to provide a service to our clients that we expect from the carriers as well. So in a lot of ours, you haven't heard of the big ones that have the Super Bowl ads that spend $1 billion on advertising every year. A lot of our companies don't necessarily do that, but it's somewhat reflected in the pricing too, because they don't have those big expenditures like the big guys do.
Right. Sure. Joining us again is Skylar Hake of Heritage Insurance Advisors. I have another one last question for me. You mentioned a couple of minutes ago, or when we started talking, sometimes someone may need a claim, they may not need a claim, and I don't know if you come in as an advisory role in this, or you can advise us right now. Wally told me something very interesting. I think we talked about this last week, especially like hail damage, which is probably maybe the number one reason for insurance companies in Oklahoma. I guess you just go out and see how many hail spots or dots or dents there are in like a 10 foot by 10 foot square. And if that number exceeds this, we have to replace the roof. If it doesn't, it's good. What would be your advice, and how would you advise people on when they need to move forward with really trying to get a roof redone? And when is it advisable to, even though you have damage, to kind of sit back on it?
Yeah, so it just depends. Like you said, that's exactly right. They use kind of like hits per square. So they're going to go out and mark the hail hits and see what's kind of the density of these. Is there, how many hits of hail per square are we seeing? That's how we kind of determine, is this going to be qualified for a total loss or to be a total replacement on the roof, or is it more suited for repair? So if that density of the hail hits is a little bit lower, or maybe it's just a couple loose shingles, obviously we're not going to total the whole roof and get you a new one if you just have a couple loose shingles. Really, I suggest contact a roofer that's just your trusted partner there, because they're going to be best to advise you on what actually needs to be done with the roof, and then we kind of make that decision on, is this going to qualify for a replacement, and then what's our deductible, what's the cost to replace the roof, what does that look like, and then going from there with filing a claim perhaps.
Isn't there some truth, and then I'll wrap up with this, Skylar, isn't there some truth that there's a direct correlation between low credit scores and people that turn in a lot of claims? And so I think your advice, from what I know and what you've told me and what I've learned over the years, is have a roofer look first. Roofers, of course, are always looking for business, but it is what it is, right? It's either going to have the number of hail hits or it's not. Because if someone just goes in and automatically files a claim, I believe that goes into like a national database where you can tell, insurance companies can see if the same customer keeps calling and asking for money. Is there truth to that?
Yeah, certainly. So as part of the application process for an insurance policy, we definitely run part of one of the reports we look at is called a clue report, which is just the claims history. So that's going to show us everything, all the claims that you filed in the past. And sometimes you'll have claims that will show up even if the claim doesn't pay out, because maybe you filed a claim and it wasn't past your deductible, or maybe there just wasn't coverage for that specific loss. Those zero pay claims still show up there and can be surcharged by some carriers even. So
I don't want to call it an ambulance chaser, but I mean that's where the term came from, right? Is people that are saying, well, maybe something happened, I'm just going to file an insurance claim. So that's why it really is advisable by you to get a roofer to look at it first and determine whether there's really enough damage for a claim to be filed, right?
Yeah, absolutely. That's the thing. We really we look at insurance from the perspective of it's really there to protect from catastrophic losses. It's not there for the $500 things that go wrong. That's just part of home ownership, unfortunately. And even now, the carriers in the current market are getting really much more strict on underwriting, and we're even seeing stuff if there's 2 claims in a certain time period, you're not even eligible for a policy. So we want to be really careful for our future reinsurability, just to make sure that we can even find insurance. So we don't want to go file too many claims and put ourselves in a position to where we might not have anywhere to go.
So I'm writing notes right now to talk to my wife when I get home today.
That's some really good stuff.
Maybe we need to slow down on the calls to the insurance company every time there's a hailstorm.
I think if our listeners just joined us, you can download our shows and hear our shows. We rerun Sundays at noon, but then also you can download our shows, and we set up a website called wallytalkshouses.com.
Yes.
This is really good advice on insurance and things people need to know, and I hope our listeners can take advantage of that.
So Skylar, Hake, Heritage Insurance Advisors, let us know how people can get a hold of you.
Yeah, so our phone number is just 405-920-5196. My email is just my name, Skylar, Skylar, @yourhia.com, and that's the best way to go.
Your HIA, Heritage Insurance Agency, yourhia.com.
That's right.
Give that phone number one more time for our listeners.
405-920-5196.
That's great. A lot of really good information.
I endorse them. They've done a great job for me, which is a testimonial. This is not paid. This is absolutely me telling you that they have done a wonderful job for me and Cindy, and it's been a great relationship, and really appreciate you being on today,
Yeah, absolutely.
Scott.
It's great to be here.
And you're listening to Your Home Sold Guaranteed radio show. I'm Dave McKay. He's Wally Kerr. And Wally, at the beginning of the show, we were talking about the different costs associated with moving. And there's probably a lot of little things that I would have not thought about that are going to add up. But you have creative ways to save money when you're going from one home to the next.
You know, we've been talking about a lot of things on our shows over the last couple of months, Dave, and I finally looked up and just thought, I think what happened was I pulled in and got gas. I used premium in my car. It's back up around $3.75 to $4 a gallon. And it hit me with, everything's gone up so much. And it hit me with this idea of today talking about how do we save you money on your insurance? How do we save you money on moving? How do we find you the best mortgage rates? By the way, if you need the best mortgage rates, again, we've been using Chris Doak with Gateway Mortgage, 253-2276, I believe is the number. And his team is knocking it out of the park for our listeners with interest rates, providing exceptional service, big team of people, great service, great communication, and the lowest rates we can find.
And a lot of programs. First-time buyers, different areas of the metro, rural buyers, everything. A lot of programs, so there's one to fit your needs.
Do you know, in our next segment, our True or False, which you like so much, I've got a really cool question today on a program. So stay tuned for that today. So
all right.
Let's get on with this, Dave. Some ideas on how to save money when moving. Dave, just kick in on any of these for input that you've got.
Okay.
So again, in a time where the cost of just about everything in life has gone up, here's a few ideas. First of all, toss, donate, or sell any item if you don't need it. It just costs time and money and effort to move it. You know what Cindy's, in our last move, Dave, so we moved 6 years ago. You know what Cindy's rule was for whether it got moved or not?
If we haven't used it in a certain amount of time?
In a year.
Okay.
She said, if you haven't touched it in a year, and if I confirm, Wally, that you haven't touched it within a year, you can't fight me and we're going to get rid of it.
So I've heard this. If you put stuff in a box and you write the date on it and put it in your attic, and later on you go look at it, and if it's been more than a year since that date, you don't even open the box. You take it to Goodwill or someplace and donate it.
Think about it, folks. Do you really need to take that to your new home? You're starting a new life, a new home. Have a garage sale. Do an estate sale. Let go of old appliances. Look, they're going to conk out. Appliances are hard to move. Sometimes they do damage when you move them in or out. Wood floors, tile, bumping the woodwork. So get rid of old appliances, and for gosh sakes, sell the heavy items. Weight benches that you don't use anymore. Dumbbells. Here's a good one. How about that big penny jug that you've been throwing pennies into for 11 years?
Oh, I got to keep that, right?
That thing weighs 140 pounds. You're gonna rip your back out of place. Get that down to the bank.
Take it to the bank.
Get that cashed in and get the money out of that.
Yes.
Now here's really a funny one. Okay. You know what? One of the things that's really a pain to move at the last minute is your refrigerator and your freezer. So here's my advice. For 2 weeks before you move, start eating the leftovers. Don't eat the science experiments in the back of your refrigerator. Okay, that'll land you in the hospital, and that will cost you more money. But eat the food. We got things in our freezer. We had a party a few years ago, Dave, at Christmas time, and had clients over. I saw hors d'oeuvres in the refrigerator the other day that were in the back of the freezer that were probably 2 years old. First of all, that stuff just needs to be tossed out. Eat the things in your freezer, your refrigerator, get rid of those. Buy packing supplies from Amazon because they're cheaper. They'll ship them right to your door.
Okay.
And then boxes from Home Depots or Lowe's. If you go to some of the retail outlets, boxes are really expensive.
Yes.
But from Home Depot and Lowe's, they're pretty affordable.
Okay.
Find out who moved recently. Maybe it's someone at your office. Maybe it's a family member. Yeah. Maybe it's a friend. Maybe it's somebody who just moved into your neighborhood and closed on a home. Bake up some banana nut bread, go knock on the door. Hey, by the way, noticed you guys came in? Welcome to the neighborhood. We happen to be moving. Would you guys still have any moving boxes we could buy from you?
Sure.
And the response is probably going to be, wow, thanks for the nut bread. You can have all of our boxes left in our garage.
Yes.
So that's a way to save money. Use your linens, use your sheets and your towels when packing.
Yes, we did this, and it was fantastic.
Instead of buying newspaper or
100%.
plastic, use all of those things. Here's a good one. Pack a necessities box. How many times have you moved and you put the Advil, you put the Pepto-Bismol, you've put the aspirin, whatever it is, in a box and you can't find it?
All the time.
I can't even find this stuff, and we're not moving. So pack a necessities box so that you don't have to run to the store and buy a second bottle of Advil when you've already got a bottle with 250
And that's
tablets.
probably scissors, tape, other things like that, markers, everything like that, all together in one comfy little area.
And the remote control for the TV if
Yes.
it's football season for me.
Yes,
Now
there
that's
you
a
go.
necessity, Dave.
Yes.
Pack items in your suitcases. How about that one? You got to move your suitcases anyway.
Sure,
They've
yes,
got a handle
yes.
on them. They may have wheels. Put things in your suitcases.
Okay.
Here's a big one, Dave. Movers are typically cheaper during the week. You can guess that
Huh.
overtime hours are very expensive.
Yes.
Stay away from closing your home sale at the end of the month, which is when most people like to close. The movers are extremely busy, and they're going to charge more money.
Sure. Yeah, I didn't
So
think about that.
try
You're
to
right.
stay away from closing at the
Okay.
end of the month. Share these with your family members, anybody you know that's thinking about moving. Also, make sure you're fully packed. Okay, so I got to tell on myself. We moved from a home. This has been, 25 years ago. And literally, Dave, there's 3 movers there with a truck, and they are waiting for me and Cindy to pack boxes, standing looking at us, costing us money.
That meter's running.
We weren't ready to go, right?
Yes.
So be sure your boxes are packed. The only thing you should leave in your rooms is your packed boxes, the furniture you want moved, and they should be clearly labeled as to where they're going to go when they get to the new house.
Oh, okay.
Otherwise, you probably better just go get a flat fee from the mover.
Yes.
If you can negotiate that, research shows that you might be able to get that done and get one flat fee so that you're not paying by the hour and you're just paying for the job to be done. Give that one a try.
Did Cindy get you straightened out right on that one? And
Dave,
get you to
Cindy
get
has
your
straightened
stuff?
me out on everything in life. I'm in much better shape for marrying Cindy. A couple other big deals here. Give the movers a clear path when they show up at your home. Doesn't do any good.
Yes. Yes.
Do any good to pack boxes and not have them be able to negotiate around the rooms.
Sure.
To pick up those boxes, put them on dollies, and get them out the door. Try to avoid expensive restaurants the night of the move. There's cheaper options. There's
Sure.
pizza. There's Brahms. Whatever those
Yes.
are, those just cost extra money because you're just so exhausted. For me, in my last move, I probably didn't look or smell good enough to go into a nice restaurant, the night we moved, because you're just so exhausted and tired.
Yes.
Go with cheaper options. That will help out. Change your address as soon as possible to avoid getting, your mail lost, and be sure you get your
Oh,
bills.
yes, yes.
I know a lot of people that stay in a motel for a couple of nights when they're moving. Stay with family or friends if you can, because that's going to save money.
Okay.
Last couple things I had here. I've actually got a list, Dave, of 42 money-saving ideas. So I'd love to help you and or your family make your move and make the entire process easier, so don't hesitate to call me on these. Last couple things I had is, I'm going to ask you this question, Dave.
Okay.
Do you really need cable anymore? I mean, do you really need cable with Hulu, with YouTube TV, with Tubi, with all these services available today?
We haven't had cable for several years. We've gone with all this. We have a streaming service, YouTube TV, and then a couple of your a la carte items.
Yeah, same with us. We use
Yes.
YouTube TV and a couple of a la cartes, and it's
Yes.
much more affordable. We literally cut the cord
Yeah.
on cable. So that's an idea too. And then just as we talked about, I'll finish Dave with saying, we had Skylar Hake on today with Heritage Insurance Agency for a reason. And that is, maybe you're selling your first home and you went and grabbed an insurance policy because Dad said use this company or use that company.
Sure.
And you thought, why not? It's a family tradition to use this company.
Mm-hmm.
Shop your insurance. Get someone who can give you the best advice on the best insurance for your home and recommend a good deductible. And based on the age of your property, so shop your insurance. These are just some money-saving ideas, Dave, that I thought we'd throw out to our listeners today.
Yeah, that's fantastic. That seems to be the theme today, is we're saving you money. So keep it right here, because now we're going to have some fun when we come back. It's our true or false quiz right here on the Your Home Sold Guaranteed radio show with Dave and Wally. Well, Wally, here we go. It's real estate true or false time. I've done pretty good last week with this, and I think I'm going to, I don't know how many questions you have, but I'm feeling very confident.
Oh, I made a couple of fun ones today. Let's
Okay.
keep it lighthearted, okay? Dave,
yes.
true or false? The largest home in the world is in Dubai. Is in Dubai.
That I'm going to take the field. You can have Tiger Woods. I'll take everybody else. I'm going to say that is false.
Oh, you got me, Dave.
Okay.
You did. You got me on this one. So this one's really interesting, and I thought just for some fun today. So the largest home in the world is called Antilia.
Okay.
It's a private residence that is in Mumbai, India. It's actually in India.
Okay.
Now, this is as of data from like earlier this year.
Okay.
So it's the private residence of a businessman, an Indian billionaire. His name is Mukesh Ambani. And this home, okay, this is a private residence, Dave. Listen to this.
Oh, no.
It's 27 stories tall. Wow. It's 400,000 square feet. It has you ready?
Yes.
A 168 car garage. So he's probably out doing lino, right? I mean, he's got some automobiles.
This is amazing.
It has 3 helipads. It has several swimming pools. It has 9 high-speed elevators. Okay. It's got a 50-seat theater. It's got, now here's the one I love. I'm a Christmas baby. I love Christmas.
Yes.
It has a snow room that spits out snowflakes from the walls. This is a true story. You can look it up. Go on the internet and take a look at Antilia. It's spelled A-N-T, like ant, I-L-I-A. Dave, the home is designed to withstand a magnitude 8 earthquake.
Wow.
And it's estimated to cost
amazing.
between $1 and $2 billion.
Now, can I get this at VRBO or Airbnb?
I don't think you're going to get to go
2?
stay with Mukesh. I don't believe he's going to be inviting you over, Dave.
Okay.
Unless you invest in one of his businesses.
I'm going to have to, when we get off the air here, I'm going to have to check that out. That sounds amazing.
Antilia, go take a look at it, listeners. It's really cool.
He lives in a hotel, basically.
He does. Okay, true or false? Here's our second question today. Warren Buffett owns the world's second largest home. True or false?
Okay, I think I'm going to get this right, and I'll explain my answer because I think he is very smart with his money, and I think that he's not going to overspend on anything. So I'm going to say this is false. He does not own the second largest home.
You are roasting Wally today because you're hitting them all. Would you believe that Warren Buffett has a net worth of $94 billion?
That's with a B.
With a B, that's right. Dave, he still lives in the home in Nebraska that he bought in 1958 for $31,500. Now, it's worth about $830 to $850 according to the internet today.
Sure.
But Warren Buffett, a really great money manager, lives in the same home today that he bought in 1958. 42 plus 23.
That's amazing.
65 years ago.
Amazing.
Yeah, there's a man that knows his money, right?
Yes.
Last question today.
Okay.
So, Dave, this is one I said we were going to allude to here in a minute. You and I know that one of the lowest down payments in the industry is an FHA loan.
Yes.
With about 3.5% down. In fact, that's what the required down payment is. So with just a 3.5% down payment required, true or false, does the FHA offer a rehab loan that will allow a home buyer to finance money into the mortgage to repair, improve, or upgrade the home, which is 3.5% down? Does the FHA allow that?
I'm going to say that's false.
This is true.
Oh, no.
And here's the reason I brought this up today.
Interesting.
So we're helping people today.
Okay.
We're talking about lower insurance costs, right? And we are talking about costs on moving. Yes. This is going to help some buyers, and here's why.
Okay.
Let's say you're shopping for a home today. Now, the first thing people need to realize is FHA loans are not just for first-time buyers. There's a maximum mortgage amount, but anybody can take an FHA loan.
Maximum is like $400,000.
It's around $400,000. I think it's $385,000, $390,000, $400,000 today is the maximum amount you can borrow.
Okay.
But you could go in and put $100,000 down on a $500,000 home, and you could still do an FHA loan. You probably wouldn't because you still have to pay mortgage insurance.
Sure.
And 20% down on a $500,000 home is $100,000.
Yes.
But let me get back to the point here. This is going to help some buyers. Let's say you go and you look at a home, and it really needs carpet, and it's got old Formica countertops. Maybe it's got old appliances. Maybe there's burn marks in the Formica on the kitchen counters.
Okay.
So a buyer can go in and buy this. Maybe it's a $250,000 home. Maybe it needs $30,000 worth of updating. You buy it for $250,000. Have an appraiser come out and meet you at the property and say, I'd like to do this. I think that will increase the value. The appraiser says, yeah, the appliances are Harvest Gold and they're 35 years old and they need to be replaced.
Sure.
Yeah, the countertops are very old Formica and they need to be redone. Hey, the kitchen cabinets are all beat up. So you go in with the appraiser. You can get up to $35,000 financed on top of your purchase price. Now, here's the kicker.
Okay.
So you're going to buy the home for $250,000.
Yes.
it only really has to appraise for 250. Actually, it has to appraise for enough if you borrow an extra 30, and the appraiser says, yeah, if you do all these things, I do think it will appraise for 280. So
Okay.
you can actually borrow the money. You don't have to go do a home equity line of credit.
Sure.
You don't have to take a second mortgage because that rate's going to be higher. You can go do this with today's prevailing rates at, say, 6 3/4. Okay, it's got to be a primary residence. Now, investors can't do this.
Okay.
You can finance up to $35,000 on top of the purchase price to repair or improve or upgrade. And the repairs and improvements must actually be made by a contractor. You can't do it on your own.
Okay.
Dave, this will help some people who are maybe seeing some inventory come available. Maybe the home does need some work. It could be outside woodwork. It could be wrought. It could be paint. It could be floors that need to be replaced.
Sure.
It could be countertops. The appraiser just has to agree that if you do those things, it will up the value of the home.
Now, is that a totally separate loan, or is it being added on? And can I pay that off early without penalty?
Boy, what great question. So it's an FHA 203K loan is what it's called.
Okay.
Also called an FHA rehab loan. Is there any prepayment penalty? No, there's not.
Okay.
Is it one loan or is it two? It's one loan. It's financed all together. If you'd like to know
Okay.
more about that, callers can call me, and I'm glad to explain that. You can even shoot me a text at 330-3000. That's a great loan for someone wanting to buy a home that needs work on the inside.
Okay, well, I went 2 out of 3. I'll take that. I'm batting .667. That puts me as an all-star in Major League Baseball.
Yeah, you
So
got
I'll
a
take
passing
that.
grade. Now, when I was in school, a 66 was a D, but if you hit 2 out of 3 questions, I think you're doing
Well,
great.
I feel at home then if that's what I'm getting, because it sounds like my high school career right there. All right, let's talk about homes. I know you have some open houses, but let's talk about the listing of the week. What's the house that is the primo choice as far as Wally is concerned?
Great. We got a great home that we just listed in Rivendell in South Oklahoma City. It is 12304 Bywater Drive. It's behind the gate at Rivendell on the lake. Absolutely breathtaking waterfront views. It's about 5,739 feet. It's on a 4/10 of an acre lot. It's got a pool. Dave, it's got 4 fireplaces.
4.
4 bedrooms, 4 bathrooms, a massive primary closet with, get this, a built-in dry sauna inside the primary closet in the primary suite.
I like that.
Yeah, his mouth is open, folks.
Yeah.
I just checked out how many cavities Dave has. I couldn't see any, Dave. Built in 2002, it's got a really large kitchen and pantry. This home is listed at $1,099,000.
Okay.
If you want to look that up online, it's beautiful. Take a look. It's our listing of the week at 12304 Bywater Drive. Dave, holiday weekend coming up, 4th of July.
Yes.
What's your family doing this weekend?
We're going to grill out. We're going to shoot off some fireworks at an undisclosed location. And I'm just going to rest and eat food and watch movies and enjoy it.
Aren't you running that $60,000 downtown Oklahoma City fireworks show? Isn't that sponsored by Dave McKay and family? Is that right?
65,000. What's $5,000 worth of fireworks among friends?
We're going to do the same thing. That's right. We're going to do the same thing with our kids and grandkids, but we do
Great.
have a couple of open houses this weekend.
Okay. 2
to 4 on Sunday. Come see us out in Rose Creek, my favorite Edmond neighborhood. Awesome gated neighborhood. This home at 17412 Hawksview Court
Okay.
is an open house. Sunday again, 2 to 4. 5,650 square feet. It's on hole 4 and backs up to the golf course.
Oh, wow.
Dave, 6 bedrooms, 6 baths. Again,
Okay.
over 5,600 feet, 4-car garage. I love Rose Creek because, do you know, Dave, for only $275 a month, you belong and live in a golf course community
Yes.
with the Trellis Restaurant and the newly remodeled clubhouse
I was
right
about
around
to
the
say
corner.
they've done a lot of renovations.
It's beautiful.
So
They
yes.
did a great job. It's got a fitness and aquatic center and a 24-hour guard stand with security that drives through the neighborhood.
Nice.
$275 a month. I think it's the best buy on a gated community with great amenities inside the metro. Come see us Sunday, 2 to 4. And then let's get back to this home that's had another reduction at 18537 Thunder Ridge Road in Norman. About 3,800 feet, almost 2 acres, a 5-bed, 4.5 bath, with room for as many as 9 automobiles
yes.
or your toys, your jet skis, your motorcycles,
Sure.
your boat, whatever it is. It's got a 2,400-foot heated garage, plus a 30 by 30 foot steel garage, a 2,000 foot deck, a fireplace or a fire pit, an outdoor living area, and a beautiful kitchen. It's 537 Thunder Ridge. That's priced at $560,000.
A motivated seller.
A motivated seller, but I tell you what, maybe not quite as motivated because we're now down at $560 on the price. But come see it and see what you think because the value is there. Dave, I want to end up today by just telling you, if you're listening and you're thinking about selling, I have agents just absolutely running around looking for listings right now. I'll make this really fast.
Okay.
Got a young family looking in Mustang under $200,000. It's been very hard for them to find what they want because they're FHA and they need a few closing costs paid. They're a great buyer. Mr. Buyer works nights, so scheduling showings for them has been a challenge. I've got that family looking in Mustang under $200,000. We've got an investor looking in Norman for homes to buy cash. He prefers close to campus, under $350,000,
Okay.
at least 3-bed, 2-bath. Looking for homes in Moore, under $250,000. They really like Brink, Junior High, Westmore High Schools, and the East Lake Edition. If you're listening,
Yes.
and you've got a home in there, if you've got a home in Mustang under $200,000, in Blanchard under $225,000, in Yukon, this investor really likes Westgate Gardens, Cherokee Gate Drive Street, and because they own 2 others on that street, they want to buy more. So if you know anybody that lives on Cherokee Gate Drive, we've got somebody that wants to buy a home.
Okay.
Also got someone who wants some land in the Yukon Mustang area, 5 to 10 acres. And finally, on this list today, anything in Nichols Hills under $500,000. A little hard to find, but we're going to put it out there. So got lots of needs, got some great homes for sale, and we're happy to talk to our listeners about any of these. Call me, 330-3000.
We're going to take a quick break and we'll be right back to wrap things up and talk about 5 best buys for sale at each price point. We'll be back right after this. We're back, and to wrap things up here, just a couple minutes left. Wally, with home inventory low, but maybe rising a bit as we get deeper into the summer, can you offer a way for our listeners to get a list of maybe like the best buys available in the metro if they're looking for certain areas, certain price points? Is there a way for shoppers to try to get that information?
We really have to help people, Dave, that have moved here from out of town. They may have moved in and just decided to rent 6 months or a year ago, and they don't know the market quite as well as we do. They're kind of relying to make sure they make a good buy on a property or a fair buy on a property. So you may be looking for yourself. You may be watching out for a friend or a family member or a coworker. So we offer a free list of the 5 or 6 best buys at any price point across the entire metro. And this will also include some off-market homes that we talked about.
Yes.
These are homes you cannot find on your own and that other agents don't know about. And because we offer the guaranteed sale program,
yes,
your home sold at a price agreeable to you, or we'll step in and buy the home ourselves. Many home sellers hear me on the radio, and they call me for a cash offer. I had a seller that did it again this week. He would prefer to sell his home without listing it at all.
Doesn't want the headache.
Doesn't want the headache.
Call the professional. Let the professional do it.
Got a pretty cool home with a walkout basement over near Lake Overholser.
Okay.
It would be in the $650 range. But if you're interested, people who move from New England, so many of those folks are like, you don't have any basements in Oklahoma, and they're looking for that walkout basement space.
Yeah.
Your brother now lives in Illinois.
Yes.
And do they have basements in Illinois?
Yes,
or do
he has a
not?
walkout basement.
Okay, well, this is a walkout basement here in Oklahoma, built right. If you think you might be interested or know somebody, give me a call. But I got that call because he just wants to sell it, but he doesn't want to place it for sale. So if you want access to homes like this, and you want the best buys, maybe you're looking in Yukon, maybe you're looking in Piedmont, maybe you're looking in Choctaw, maybe you're looking in Blanchard, we can review all the phone calls that we've received and have already logged into our database on these people that would like to sell but don't necessarily want to put it on the market and help them, gain access to these homes. Because, Dave, I'm getting 8 to 10 calls a week from home sellers right now.
Oh, wow.
They're either ready to go or they're coming soon. Some are 10 days out and others are 2 or 3 months out. So, and more often, again, they just prefer to sell their homes without even going on the market. It's easier for them, it's less stressful, and it often helps avoid all the the preparation
So
and showings.
maybe that new home they're having built, maybe the timeline moved up, and they said, "Oh, wait, we weren't ready to sell. We got to we're getting the house ready, but now the timeline's really quick. I just want to call Wally. Wally, let's just unload it now and not go through the whole rigmarole."
And we do have a cash offer program too.
Yes.
And I'll try to give you the best possible fair offer that I can give without hurting myself. If you are building right now and you're not going to be on the market in the next 30 days or so, right at the end of June, 30 days from now, we're right at the end of July. Dave, you and I have talked about the market will slow down, and it always does. Now, if rates were going to drop to 4% at the end of August,
then they don't have a problem.
Yeah, what do you think would happen? But you and I know that's not going to happen.
That's correct.
The
Yes.
Fed has talked this week, and they say they do believe they'll have a couple of more rate increases in the year 2023. When that's going to be, who knows? But if you're not selling a home today, and you're looking at 30, 60, or 90 days down the road, give me a call. We can talk about a potential cash offer. And if not, let's tap into the people I've already got looking for homes, like we've talked about today, and see if I've got somebody that will already fit for your home where you don't have to list your home for sale.
Fantastic.
Call me today or this week at 330-3000. You know, if you're thinking of selling, just give me a call. We've got lots of people waiting for the perfect home to come up for sale. Dave, I looked and over the last, I think I looked over the last 60 days, we've got 1,200 people who have been searching for my home on our website.
Wow.
Looking over the last 60 days. And why are they still looking? Because there's not enough inventory. Not enough sellers want to sell. We talked about it. They're sitting on that 3-4% interest rate. They're not motivated to sell today. Buyers are just combing our website trying to find the perfect home. If you think you've got one of those perfect homes, call me before you list, and let's review the database of buyers I've already got.
Sure, I might be able to get a little bit more money for my home since all these people are looking for homes and it's a little bit more scarce. That could offset a little higher interest rate moving into my next home. I can go now to my dream home and I can afford it and move in because Wally had a couple of buyers bidding in on mine and I was able to make that change.
The inventory is low and it's still a great time to sell. And again, if you'd like to have a copy of that list of the 5 or 6 best buys in the community and price range you're looking at, shoot me a text or give me a call, 330-3000.
And again, if you want to get a value for your home, you're listening to the show and you're just thinking like, yeah, I want to start looking. I want to go to check out that home on Thunder Ridge or go to Rose Creek and live on the golf course, basically. Hole number 4 is what you said.
That's right.
That would be fantastic. Just text your address to Wally at 330-3000. And on a scale of 1 to 10, I think my house is a 7.5 or an 8. And he'll give you a decent value of what he thinks the home is worth, and that's a great point to jump off with.
Well, and I'll give them an estimated value. It won't be any. I mean, there will be some personal, knowledge that goes into that,
Sure.
but I'll give you a fair market value for your property. And remember, if you need to sell a home to be able to buy your next home, we did create our guaranteed sale program there. Let me help you find another home, and I could agree to buy your current home so you're not stuck with 2 house payments at the same time. Dave, happy 4th. I hate to say this. Dave, have a bang-up 4th this weekend.
Okay, you too. And I'm going to sneak out with that last donut.